want an exposure to a market or an asset.
Everything they need in one place. Be the world's foremost authority on individuals, advisors and institutions. Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall, and here with me today is Tim Steer, manager of the Artemis UK Growth Fund. Hello, Tim.
Hello, Emma.
How are you?
All good.
So what's going on in the markets at the moment? Because we've had a volatile couple of weeks, and in fact a volatile summer. It's difficult for investors in the UK market to know what's going on.
Extremely difficult at the moment. We've come to the end of QE in America. We're coming to an end of QE in the UK. European growth is slowing. Chinese growth is slowing. The oil price has taken a bit of a dive down. So a lot of uncertainty. And I just feel the market will probably move sideways for the next 6 to 9 months, really.
And why do these things that are happening outside of the UK affect the FTSE?
Well, of course, the FTSE is full of overseas earning stocks. And what happens in the rest of the world affects the UK and those stocks that are listed in the UK. So what I've done in the fund recently is move towards UK companies with a more domestic focus. In 2010, when I took up running the fund, we had a lot of stocks with overseas exposure because the UK wasn't a great place to be. Now, since 2012, to date, we're very much focused on the UK domestic economy, and of course we know that the UK is growing quite fast, certainly in comparison to many other European and other Western economies.
And they tend to be lower down the cap scale, don't they? The more domestically focused stocks are sort of the mid and small sector.
Yeah, funnily enough, you're right, but we've got a lot of FTSE 100 companies in the portfolio, primarily because many of these companies at the bottom of the FTSE 100 used to be mid-caps. They've done so well over the last 3 or 4 years. They've now gone into the FTSE 100. So Ashtead, EasyJet are good examples of the kind of companies we own in the portfolio.
Is that a risk then? Because 2012, mid-caps were the best performing sector across all classes, and 2013 they did well as well. Is there a sort of risk there that some of them are reaching full valuation?
Yeah, I'd agree with that. We have moved up the market cap in the last year or so, looking for yield, looking for dividends and better cash flow rather than growth. I think there is a focus away from growthy type stocks to more yielding type situations or cash generative situations. Plus, what we've also done in the fund is we have got a fair bit of cash at the moment, so this is a defensive type of strategy at the moment. And unlike most of my sort of 400 odd other competitors, we're able to short stocks, so we can short up to 10% of the NAV of the fund in individual short positions, and these obviously in this market at the moment are working pretty well for us. So it's a kind of nice defensive fund for the volatile situation we've got at the moment.
Tim, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.